I think it's really important to just pick up on your point about outperforming peers, because we do feel that we've had a good quarter in Q2. We've taken share for the 8th consecutive quarter. The strategy is working. Our relative revenue growth is 375 basis points higher than our peers. To your point, we're also being very disciplined in terms of the way that we manage cost. We've had a G&A reduction program going for a number of quarters, and we've over exceeded the targets in terms of what we've delivered. So 162 million of run rate savings versus 150 million. And then on top of that, which is translating through to a robust EBITA margin, we've also delivered more cash, both in terms of operating cash flow and free cash flow. So for us, it's been a strong quarter. I think in terms of your question of how long does it last, it's not just about cost. We're obviously pleased with where we've got to on the cost management program, but we're also very, very focused on taking share where opportunities exist, and we're determined to keep that going.
How do you get those opportunities? What exactly are you looking for in that pace? Is that by way of acquisition? Is that by way of assimilation into different areas and different growth models as well? What exactly are you looking at?
We've got a really broad-based portfolio. So we deliver flexible labor services, we deliver professional recruitment, we have an engineering R&D consulting business, and that gives us a breadth to what we offer. But equally, we're very diversified within those individual GBUs. So we can really point at the sectors and the territories where we see growth. And that's what we've been doing for the last 8 quarters. It's why we continue to deliver share gains against our peers.
Coram, it's Karen jumping in. We've got a market route that's been playing out over the past number of sessions. And one of the reasons has been the US jobs market. There are concerns about what that's signaling. As you look at the job market from your lens, is there any significant cooling that has stepped up since the last quarter when we spoke to you?
I don't think there's been any significant cooling since the last quarter. Obviously, the data that we saw last week was not where people were expecting it to be. But to be fair, and we've spoken about this before, Karen, the US labour market is quite mixed. There are pockets of growth and there are areas of pressure. And for all of the recruitment players, whether it's professional recruitment or flexible labour, this has been a challenging market for a number of quarters. So it's less that there's been a big shift. It's more that actually there's been quite a lot of pressure in that market for a period of time. For us, we are very, very focused on positioning our US business in a way that makes sure it is as healthy as it can be. Been working on sales intensity, been working on the cost base, and we're really making sure that we are positioned well to capture growth and take share when that rebound comes, which it will do.